Here again with smart system, we should now have a good understanding of how to locate trends in the market, some of the different components that make up those trends, and finally how to recognize support and resistance. Now let's tie everything together with the final lesson in this series, multi-time frame analysis. So no matter what time frame you end up trading on, or what time frame particular strategy calls for, it's important to always have a big picture overview of what's happening in the market. Although there are exceptions to this, most traders will tell you that if a particular trade or some particular analysis that you're doing is lining up on multiple time frames, then the chances of that trade or analysis being correct are greatly increased in general. Let's take a look at what I'm talking about here. To show this example, I put up a chart of the Euro-Dollar 5-minute chart for something very basic, just a new trend in the market that we can go with the momentum. And pretty obviously when I pulled this chart up, the trend in the market was down on the 5-minute chart. So if we were just looking at the 5-minute chart, we would want to sell into this momentum here. But let's say to get a little better idea of what's going on in the market, we put up a little bit of a longer term chart and looked at the hourly chart for confirmation. And you can see here on the hourly chart as well, although we're off of that trend line a bit, it is still a downtrend in the market, so you know that would be sort of confirming that might be a good trade that we were looking at before. But let's say we looked at one more time frame, which is the daily chart. You can see here that not only is it not a downtrend, but it's a pretty strong uptrend that's been going on for several months. So this is actually a very strong uptrend. Very clear there that the momentum is definitely up on the daily chart. So you know, depending on what we were planning on doing with that trade, this is just a very basic example. We wouldn't place trades like this, but depending on what we're planning on doing, and from the 5-minute chart, we may want to seriously consider changing our mind after looking at the daily chart and seeing that the trend is very obviously in the opposite direction of what we were planning on doing. And in general, now that you sort of seen the thought process here, a better way to go about trades, or way that traders will use multi-time frame analysis in general, is look at long-term charts first, even a weekly or monthly chart, to get a good feel for the overall trend in the market, and then work your way down, looking for trading opportunities on the shorter term charts which go with the longer term charts. In addition to looking for trading opportunities in this way, and identifying trends and those types of things, this also works for looking at support and resistance levels. So if a support or resistance level is showing up on multiple time frames, then it's considered much more valid than if it's just showing up on one. In general as well, just as with trends, if a support or resistance level is showing up on a longer term chart, it's considered much more valid than on a shorter term chart. So that's our lesson for today. You should now have a good understanding of multi-time frame analysis. And next lesson, we're gonna start a new series on charting patterns. Have a great day.